Hello traders, Gary Wagner here. It is 11:14 in Honolulu, 5:14 in New York on Friday. Happy Aloha Friday, as we say on the island. It is the 7th day of October, 2022, and this is the Daily Report for Gold and Silver, our weekend review. Today, the jobs report for September definitely showed a decrease in monthly gains, with only 263,000 new jobs added last month. Still, that was not enough to satisfy the Federal Reserve, which means that in November, during the FOMC meeting, there is about an 80% probability that the Fed will implement yet another 75 basis point rate hike, the fourth consecutive rate hike of that magnitude in the last four FOMC meetings. Gold is currently trading off by about $18.50 or 1.08% at $1,702.30. We were hoping for this dip today because we put in a buy order at 705. We put our stop at 1688. Our stop has been safe, but it is behind us by about $3 on the trade. A lot of that has to do with rising yields as well as dollar strength. The dollar is currently up by 0.44% at 112.68. And we can see that notes have also gained a little bit. And that's what's put so much pressure on not only gold, but U.S. equities, with the Dow declining by 630 points, a little over 2%, and the NASDAQ down about 3.5% on the day. This first chart is a short-term 240-minute candlestick chart of gold futures. As you know, we had a working order to go long December gold at 1705, putting a stop at 1688. Well, once the jobs report came out and the market sold off briskly, of course, we got filled because we saw prices go from about 1720 down to today's low at approximately $1,698. I felt much better, of course, when it recovered an hour or so later and traded to a high of $1,714, but currently we have gold sitting at $1,702.60, just off our entry point. Now, in terms of where I'm looking at critical support, I think 1693, that is the 38.2% fib retracement, and the 42% retracement at 1689 should provide us with good support, and that's why we placed our stop at 1688. Because the CPI report for September is coming out next week on the 13th. Any kind of a nice move to the upside, if we're fortunate enough to see that at the beginning of the week, would give us reason to pull profits. My upper level target is about $1,735. And as I said, our current stop is at $1,688. This next chart is also a 240-minute chart of gold futures. However, we drew this in about midweek because we were looking to enter the market on a break above $1,680 on a closing basis. However, it opened during the day at around $1,670 and then closed on that day at $1,708. So I wanted to find some sort of a dip to enter the market. And what I was looking at, and you can see this is the date that I actually drew it on, which would be about the 4th of October. And I was looking for a dip to come in somewhere around here, 1705, and then assuming or hoping that it would move back up. Well, we were correct about the dip that was created today. We just need to be correct that it will recover at the beginning of next week. We are looking at a daily chart of gold futures. It does have the same data set for the fib retracement, but you can see this rally much more clearly. It starts when gold had bottomed at about 1622 up to the high that it hit at 1738. As I said, our plan was to buy on an effective close above $1,680. My regular daily subscribers know that that was a key and critical area. However, what happened was the day that we had that rise, as I said, it opened below 1670 and closed, if I remember correctly, at 1708. So I felt as though we weren't getting in at around 1680, and I was hoping that the following day would provide us with a dip after seeing a sizable move of about $35. I was wrong. The market moved up another double-digit day, and so as we went through the week, I felt that the only opportunity we would have would be the jobs report on Friday. We would get a dip. It would allow us to get filled at around 1705, and then we could move forward, putting our stop at 1688. That is the strategy anyways. We certainly want to be careful about the CPI report coming out on the 13th of October next week, but we should get some early forecasts on it to get any real consensus if we have a real reason to get concerned and we want to exit this trade quickly. This has been Gary Wagner, wishing you, as always, good trading. Have a great weekend. We'll talk to you on Monday. Bye-bye.